November 3rd, 2025. IonQ's stock has climbed 294% in 12 months. Rigetti and D-Wave, 3,080% each. Quantum Computing Inc., up 1,260%. On Wall Street, analysts are publishing price targets that would make IonQ worth $200 billion. Bigger than Intel, bigger than AMD. There's just one problem. Quantum computers don't actually work for commercial use yet. This isn't a story about the next NVIDIA. It's a story about what happens when an entire market decides the future is worth more than the present. The narrative was intoxicating. Quantum computing would crack encryption, revolutionize drug discovery, solve optimization problems that take classical computers centuries. And in 2025, the money followed the story. JPMorgan Chase announced a $1.5 trillion or 10-year security and resiliency initiative, quantum computing front and center. Amazon, Google, IBM, all building quantum labs. The US government opened the checkbook. IonQ's CEO, Nikola stood in front of investors in February 2026 and delivered numbers that sounded like science fiction. Fourth quarter revenue, $61.9 million, beating analyst estimates by over half. Full year 2025 revenue, $130 million, a 202% increase from 2024. We significantly outperformed our revenue guidance range, Damasi said, exceeding the midpoint by 55% for the fourth quarter. Wall Street loved it. Analysts started modeling IonQ as a software platform company with 80% gross margins. The stock became a proxy bet on the entire quantum future. By mid-October, quantum stocks as a group had gained between 670% and 6,217% over the trailing 12 months. Here's what nobody wanted to ask. What were they actually selling? Look at the revenue. IonQ reported $130 million for full year 2025. Sounds impressive until you compare it to the valuation. At its peak, IonQ traded at a market cap that implied it was worth 50 times annual revenue. The three most expensive stocks in the S&P 500, companies with actual moats, actual earnings, actual market dominance, trade at an average of 55 times sales. IonQ was trading several multiples above that. But here's where it gets strange. Pull up D-Wave's fourth quarter numbers. Revenue for Q4 2025, $2.8 million. Operating expenses, $36.6 million. Net loss, $42.3 million in one quarter. They're spending $13 for every dollar they bring in, and D-Wave's stock went up 3,080% anyway. This is the part nobody talks about. These companies aren't losing money because they're investing in growth. They're losing money because there's no product market fit yet. Quantum computers require near absolute zero temperatures. They're error prone. They can't maintain coherence long enough to solve real-world problems. Every quantum computing company will tell you their systems are commercially available. Technically true. What they won't tell you is that almost no one can use them for anything profitable. Here's what everyone missed. The revenue IonQ is reporting isn't coming from companies using quantum computers to make money. It's coming from research contracts and government grants. Organizations paying IonQ to figure out if this technology will ever work. That's not a business model. That's a science experiment with a ticker symbol. And then, completely ignored by everyone, this happened. In January 2026, analysts started publishing notes pointing out the obvious. One Motley Fool piece ran the numbers. For IonQ to merely align with the valuation of the most expensive S&P 500 stocks, it would need to fall 63%. Rigetti, 94%. D-Wave, 84%. The math was brutal and public and nobody cared. This is where it stops being a coincidence. Go back to 2021. Rivian goes public at a $100 billion valuation, more than Ford, before delivering 156 trucks. Lucid Motors peaks at $95 billion with zero revenue. The pattern is identical. Massive total addressable market, revolutionary technology narrative, a few impressive demos, and a stock price that assumes the future is already here. EV stocks crashed 70 to 90% when reality set in. But that's not even the most interesting part. Look at IonQ's risk disclosures. The company's 2026 roadmap depends on successfully integrating electronic qubit control from their Oxford Ionics acquisition. If that integration fails, the entire scaling narrative collapses. They're also dependent on long-cycle government contracts, the kind that disappear when federal budgets tighten. Execution risk isn't theoretical. It's the entire thesis. The trap has a name: narrative capture. When a story is compelling enough, markets stop pricing the present and start pricing a fantasy version of the future. Investors don't ask, what is this worth today? They ask, what could this be worth if everything goes right? Think about the iPhone in 2007, revolutionary product. Worked on day one. You could walk into a store, buy it, and use it to check email. That's a product. Quantum computing in 2025 is more like the iPhone in 1997. We know it's theoretically possible, but nobody's figured out how to make it work outside a lab. The problem isn't that quantum computing won't matter. It probably will. The problem is that probably will matter eventually and worth $200 billion today are two completely different statements. And when the gap between those two statements is wide enough, physics eventually wins. In 2021, it took 18 months. In 2000, it took 2 years. The timing is always different. The pattern never is. So what do you do with this? If you're holding quantum stocks hoping they're the next NVIDIA, understand what you own. NVIDIA had revenue, gross margins, and paying customers long before the AI boom made it a $1 trillion company. IonQ has government contracts and a roadmap. That doesn't mean quantum computing is fake. It means the crowd has priced in a decade of progress that hasn't happened yet. And when crowds do that, one of two things occurs. Either the technology catches up faster than anyone expected, or the stock catches down to reality. The signal was always there. Revenue growing 202% sounds incredible until you realize it's $130 million supporting a multi-billion-dollar valuation. The math never worked. The story was just too good to check. Here's the thing about bubbles. They're not just about greed. They're about timing. Quantum computing will probably change the world. But eventually world-changing and worth $200 billion today are not the same sentence. The stock market isn't a machine for rewarding good ideas. It's a machine for transferring money from people who confuse the future with the present to people who know the difference. If this is the kind of story you want to see more of, you know what to do.